Hello, everybody. Welcome to a new episode of Tech Can't Save Us podcast brought to you by Literal Humans. As always, I am Paul David, founder and CEO of Literal Humans, and I'm joined today by Jonatan Allback, co-founder and CEO at NjiaPay. Welcome to the pod, Jonathan.
Thanks for having me.
So by way of introduction for our audience, NjiaPay is a payments as a service company dedicated to helping African merchants simplify and scale their online payments through a single seamless integration. Jonatan is a fintech veteran with nearly 15 years of experience, including significant tenure as the VP at Adyen, where he managed global accounts like Netflix and helped eBay migrate to its own managed payment surface. Just tiny, small clients that were probably really easy to manage, I'm sure. He's now using that deep expertise to remove barriers and enable global commerce in some of the world's most exciting emerging markets. That's awesome. We love emerging markets, Jonathan. We've worked with like Chipper Cash and a lot of folks with Gray, a lot of folks in that space. So yeah, very excited to hear what y'all are up to and to jump in. First things first, if you can just kind of explain the landscape that you're working in right now. Tell us about the current state of this sort of fragmented African payment ecosystem. And, if you can describe for our audience, like what are the hurdles that, businesses and individuals face as they're trying to scale across different parts of the continent?
A lot to unpack there, Paul, and where to start. But so Africa is always considered almost like one country, right? People talk about Africa as one place and forget how many countries are in the continent of Africa. I think the last number I read was 54 sovereign countries, basically. And the biggest challenge operating across the continent is that each country almost has their own challenges. You have 40 plus currencies across the continent. You have 30 plus different switches, which is run by the central bank to determine where to send the transaction from a payments perspective. Different licenses are required in different regions or in different countries even. And that creates a variety of challenges operating across the continent. And in most instances, the providers that are offering services and solutions in these markets are also running on very old and legacy infrastructure, which creates even more fragmentation. So you have fragmentation from multiple angles here, both on the regulatory side and on the technical side.
Yeah, I wanted to ask about that because, like, first of all, we always like to hear like the origin story, almost like a superhero. So, like, for you, first of all, if there was a moment, that you decided that, the 54 different countries in Africa were the right place to build, a payments as a service infrastructure, and then I want to ask you about the other providers, but dig into that juicy question first.
No, absolutely. So I started working with a company called Talk 360 while after Adyen I was consulting for a few years, and they had a vision to spin out their payments platform into a separate entity because Talk 360 is an international calling app operating across the African continent and globally. In Africa, they had to integrate into 6 different payment service providers in order to be able to offer the right payment methods and have the right reach for their consumers. This added a significant amount of complexity on their systems and their engineering resources and the operational team. So they decided to build out the first platform of NjiaPay. And as I started helping Talk 360, I got to look underneath the hood of some of these legacy payment service providers. And it was like taking a step back in time from 2010 here in Europe to see how some of their hosted payment pages looked like and some of the infrastructure and providers that they were working with. And that was my aha moment when I got to experience firsthand how far behind certain countries and certain providers across the continent really were. So that was my aha moment, so to speak.
Yeah, and like, I love that you mentioned the other providers and your aha moment. You all sort of aim to be this one API solution. So want to kind of unpack how the one API solution solves what is often operational nightmare for online retailers, and how does the work that you all do differ from those traditional payment service providers that have operated in the region for the past few decades?
Yeah. So in a nutshell, we are all trying to solve the same challenges, how to process more payments online. Our approach is slightly different than the payment service providers. First and foremost, we are not a PSP. We are not in the money flow. We have built a technical layer that sits in between the payment service providers and payment method providers as well, and the merchant. Then aggregate all relevant payment service providers in specific countries like South Africa or across specific regions, and are then able to optimize a payments terminology called orchestration between the best performing payment service providers, PSPs, in each individual market. So if you're like Talk 360 and you're operating in 6 regions, then you go with one payment service provider because it's either the cheapest, it has the most payment methods that you need, or it's the one that has the best marketing. It might not be the best PSP suited for your needs as a business. And that's really where NjiaPay comes in to sit as the layer in between the PSPs. So if you realize one PSP was the cheapest but is not good enough, without needing to do a separate integration, now you can plug in a second PSP and we can then optimize between the two because we have what's known as a PCI compliant. So we are PCI level 1 compliant. We have that certification. So we can store card details and sensitive information in our system and then route that transaction to make sure that we deliver the highest success rates for our clients.
That's great. We're digging into the product, which is always the fun part. Wanted to, kind of understand a bit more about, this, like for a merchant, like giving us their experience, like kind of transitioning from maintaining multiple integrations to just that single NjiaPay integration. What does that look like for them on a day-to-day operational level?
So from a customer support perspective, you have now one portal that you can go into and search for a payment that a client of their customers of their might have asked about. We will then show which PSP it was processed over, the latest status, and if it was successful or failed, instead of you having to access multiple portals trying to figure out where the transaction is. So that saves time. Financial reporting wise, now we are able to consolidate all of the transactions, and we can also ingest sort of the settlement files from the PSPs as well to give the finance manager one consolidated report around the traffic that has been processed. And then lastly, from a technical standpoint, now it's one fairly simple integration, and we manage all of the complexity around the requirements and the capabilities, because each PSP has different capabilities, and that's the challenge of working with more than one, because then you have to build out those capabilities individually, and that's where NjiaPay comes in and manages all of that complexity.
That's great. And would love to understand a bit more about this smart routing feature of the platform, and how does it kind of ensure redundancy and those higher success rates you're looking for in markets where the infrastructure can sometimes be a bit volatile.
Absolutely. And it's load shedding in Africa is pretty common, and that, of course, has an impact on the availability of some of these providers. So what our system is able to do in real time is to detect if one provider is down. We can then either put that in a penalty box and not send traffic over that provider. And what we can also do is identifying which provider is able to deliver the highest success rate on specific card types, Visa, MasterCard, but then you can split that into credit and debit cards as well. You can split that into international issued cards from the UK or from the Netherlands or from Sweden, and then you can route that to the provider that is best suited for those individual transactions. So we can drill as far down as what's known as a bank identification number, which is the 6 to 8 first digits, on your cards to say PSP1 should get access to Paul's card, PSP2 should get access to Jonatan's card. And this is all done automatically in the background. We, of course, make sure that we discuss the client's requirements, the preferences. If it's online retailers, margin might be tighter. They care more about cost. If it's a digital merchant, they have a higher margin. They might just care about success rate. All these things matters when we talk about online payments, especially in markets such as Africa, where in certain countries you have 65 to 75% success rate. And that is around 10 to 20% behind the Western world. Visa and MasterCard claim that card not present is around 85% on average, which is, of course, a big gap. And that's where our smart routing feature can help minimize that gap.
Would love to jump into, now that we've covered product, talk about growth strategy a bit. We're a growth consultancy. We'd be remiss if we didn't. We're going to get you guys in for a growth strategy session at some point. You guys are deep in execution mode. You mentioned on the pre-call. You've got this huge challenge in front of you. Build a borderless growth strategy in a region where there are 54 different regulatory environments and cultures and languages and stuff like that. So we know that African fintech has boomed, but many companies, I think, they struggle to move beyond their home market. What's your what's your strategy for achieving that rapid cross-border expansion, and how are you navigating the vastly varying requirements of many of them regulatory across different African nations?
Staying out of the regulatory microscope as long as possible. It's the short but also the honest answer, right? We consider ourselves a tech company. We are more of a SaaS platform, which is also what you alluded to in the beginning, payments as a service. And we're more that payment performance partner that want to take a slightly different approach on payments in Africa. And that's one way of being able to achieving this expansion is by not going as deep into the money flow, because the moment you do, that's the moment you need those licenses. And that's going to add time, resources, and money. And I really want to make sure that we stay as lean and as mean as possible while we're able to scale. And we can do that on the tech side today. I mean, we are built on GCP, Google Cloud, and it's not difficult to scale with the cloud infrastructure today. And with AI and the technology that is available, it's also making our team a lot more effective and efficient at the same time, which is sort of why for us, we are able to scale at the same speed and the requirements that our clients is demanding or want us to do. And that's also why our strategy on the expansion part is tied to our clients, because I'm not going to go and integrate 3 provider in Uganda or Ghana if I don't have any client using them. So for us, we are very focused on making sure that our expansion is tied to a specific client's need.
And jumping in a bit more into what you see as and starting broad here, kind of the bigger roadblocks that digital commerce and sort of fintech are facing on the continent. What do you see as like the biggest obstacles over the next 3 years, and how does your roadmap kind of, as you mentioned, we're staying out of the regulatory stuff. How does your growth roadmap design to sort of bypass that stuff?
Yeah, so indeed, I mentioned the regulatory challenges and roadblocks and everything that brings, of course. But then the second to that is, of course, the infrastructure in a lot of these markets. And when we talk about infrastructure, it also is required to split that into the infrastructure such as the road. There are countries where addresses is a scarcity, and it's a reality that you may not be able to deliver a product or a good. So that's, of course, a challenge. And then 2, infrastructure such as bandwidth and reliable Wi-Fi, or the ability to even buy on your smartphone, if they even have a smartphone. So this is where you really have to adapt. And what we've built, for example, on our hosted payment page is an way for it to load a lot quicker. And I'm not the technical co-founder, but the basic of it is that it should be as quick as possible to get to the payment page, and everything else that might be required can happen slower. So the buyer is not sitting there and waiting 10 seconds for the payment page to load. And then we're also looking at latency to make sure that we are able to optimize between the various services in order to reduce that latency, because of course, the longer you have to wait, the longer and the higher likelihood of you abandoning the purchases. And all of these things are challenges in and across Africa that we are trying to address by using smart technology and honestly partnering with great companies that are addressing these challenges as well.
Yeah, you've led me right into my next question, which is, it seems like partnerships are kind of in your DNA, from Skipify to Talk 360. Tell us about the exact role that strategic partnerships with mobile money providers and others play in your long-term growth strategy.
I mean, first and foremost, we need them to solve the last mile. We are dependent on them, and we're partnering with them. And our approach is we want to make it a triple win. A win for us, a win for you, is a win for the merchant. And that's the approach that we are taking. We share the challenges that we are facing with them. We are challenging them to improve if we know that there are things that are not working or things that can be improved upon. We act as a first line of support for our clients. So we sort of remove the need to interact as much as possible with the payment service providers or the providers like mobile money operators. But in the end, we will only be able to be successful if we can rely on them to solve the last mile. And that is, of course, processing a payment successfully and reliably. So for me, it's coming back to that triple win. We cannot do what we do without them, and are, of course, getting better by working with us, because we will challenge them in a way that most merchants and clients will not be able to do, because they don't have the knowledge and the expertise and the experience that we do.
Yeah, I love that. Like, we're hearing so much about partnerships. We're actually working with some clients and partners on setting up partnership infrastructure and, ways to track and semi-automate, channel partnerships, for example. So partnerships are hot right now. And I love the energy that you're bringing to it of like, hey, we need them. So you're coming in with humility, but we also make them better. So like, that is the best kind of partnership, when you actually need each other and you sharpen each other. So kudos to you for, your perspective and what you're doing there.
No, thanks. For me, that's how I was taught how to do it, or how we did it at Adyen. In the US, you have this vendor management terminology, and we always went into the mindset of, hey, we consider ourselves being more of a partner, and we want to help us get better. And so you can tell us what you need and what you want, and let's work together on figuring out what we are capable and able to do. And that's how I have ran my way of working for the past 10 years.
Absolutely. Yeah. Once again, you've led me perfectly into my next two follow-ups. So kind of digging, this is the question to kind of bridge your growth strategy into your background. You've worked at eBay, helped them grow to over 2 billion in process volume. Would love to understand kind of what big tech growth principles are you applying at NjiaPay to help merchants scale at the same velocity? And since you mentioned Adyen, you kind of already alluded to this, but like, what are the important lessons from Adyen and some of those other places you've worked that you're applying in your culture at NjiaPay?
First and foremost, listen to your clients. I mean, really listen to what they are telling you their problems are, and then focus on figuring out a way to solve them and solve them together with them. Don't just build products in silos. Because if you can solve a problem for a client, then they are more likely to stay with you. They're more likely to be happy with your service. And they will tell other companies out there what you were able to do for them.
Can I ask about that real quick? Because I totally agree with you, and we've done that. That's why we've been around 6 years. So we just but like, how do you bound that within as a leader within a way that is manageable for your team, so you don't feel like you're constantly just kind of throwing out the scope? Because I know that can get tricky from personal experience of doing it myself.
100%. And that's, to be completely honest with you, right? This is a conversation me and my co-founder Roderick is having on a weekly basis, where it's a toggle between product roadmap and customer needs. It comes down to a balancing act and figuring out, hey, what will deliver us the most ROI, and when can we deliver it, and when is it actually needed? And a lot of the times it comes down to managing expectations. Two real examples. There was in 2014, Spotify was one of my clients that I was rolling out with Adyen across the globe, and they were hit by a massive fraud attack. Card testers just abusing their systems, and they, together with us, were able to solve and block these guys by us building specific rules for Shopify that Adyen could then eventually sell on to other clients. So this was one where we had a key client that is growing with us, have a problem. We can fix it. It's going to require a couple of days development effort, but it's going to help us with that relationship, and it's going to enhance our product. Perfect example, right? And because I knew the sense of urgency, of course, we got it done quick. I think we launched the solutions within 3 days. Another example is where you had real-time account updater being rolled out in the US, where I could try to book an Uber with an expired card without knowing that my card was expired. Uber would process that transactions via Adyen. We would then send that transaction to the issuing bank, get their refused expired card, check with MasterCard and Visa in real time if they had an updated card. If they did, we would collect that updated card and pass that on. This was one of those products that we talked to a handful of key accounts and asked them, is this something you want? 80% of them said yes. So of course, then we said, okay, should we prioritize this? Because these are big clients that are willing to give us more volume. Yes, okay. Can we get it done within the next 2 to 3 weeks? Or is it more 4 to 6 weeks? We can get it done within the next 2 to 3 weeks. Great. Then we can communicate that within a month. I would say half of all of these 80% clients were now live with that product. So of course, it is this back and forth, but for me, that is one of the biggest learnings that I'm bringing. It's listen to your clients, solve their problems, and you will continue to grow with them, and they will become your biggest champions. And this is also why I'm emphasizing partnerships. And this is also why I'm telling people that we are a payment performance partner. We're not a provider, we're a partner. We want to help our clients improve that payment by listening to them and solving their problems.
Yeah. Yeah, I mean, I couldn't agree more. I think one thing that I've thought about is like, as a leader, how do you really be the chief client advocate and like always push, push? Because you're almost never going to lose, but also you want to be careful and not, burn out your team or alienate them or, set expectations well with them, for them. And sometimes you have to back them, when clients come back. And so it's really interesting, that balance. And
100% agree. And it is a challenging balancing act. And you will make mistakes and you will place the wrong bet at time, but that's also fine. And to your point, as a leader, you have to make sure that you got the back of your employees and listen to them and what they believe that they want to do, and not just say, hey, I know everything. I know what we should do as a leader, because you don't. And it's always good to take their input and feedback into consideration as well.
Yeah, no, I think that's a fantastic point.
The second one is innovation, because that's would be silly if I didn't mention it. I learned this and saw it firsthand, how innovation can really help you grow and help you and your companies scale, especially when you have the fortune to be a startup, right? And scale up as well. You have to innovate. And in today's world, it's more important than ever, because if the day you stop listening to your clients, solving their problems, and stop innovating, then yeah, somebody else is going to come behind you and take over your position.
Yeah, it feels like the pace of change and the need to innovate. I was listening to a webinar the other day, and they were talking about LPMs, learnings per minute, and I was like, it was like a little bit anxiety reducing. I was like, I need to learn every minute and learn a lot every minute. Like, it was like, yeah, but like that kind of, like I say to my team, hey, when you do a task or a project, and maybe it's going to take you an hour or whatever, spend the first 10, 15 minutes just trying to innovate the process. Because now there's so many different things you can do, so many things you can build to,
Yeah.
expedite and drive more quality into that work you're doing. Just give it a try. And if it takes you another 15
Love
minutes
it.
extra to finish, fine, but you could have saved a lot of time and a lot of learning there. So,
Yeah, no, smart.
yeah, yeah. Well, cool. Well, I think that's a great piece to end on. Anything you wanted to get in before we finish up, Jonathan? Any special announcements, product releases? We love a live release on the pod. Anything you want to bring?
I mean, so we just closed our seed round, which
Congrats.
thanks, which is great, and then we are now looking at bringing some of that innovation. So one product that we are launching now in Q2 is account updater, because subscription merchants in South Africa, which is one of our core market, they keep telling us that 15 to 20% of our subscribers churn involuntarily on a monthly
Whoa.
basis because payments fail. And of course, you can't recuperate all of them. Some of them are because
Right.
insufficient funds and
Yeah.
just not happy, and they just going to let it run out. But 1 out of 4 payments fail because the card is expired, lost or stolen or canceled. And that's where products like Account Updater have worked for over a decade in the Western world, in the developed
Yeah.
part. And we want to make sure that all those products are made available in the markets where it makes sense. And South Africa is a card dominant market. So for us, it is a product that is needed, and that is coming in a couple of months here.
No, that's great. Well, thanks for sharing that with us and announcing it. And yeah, I mean, what I love about this discussion is, you're taking this world class, financial and fintech expertise, and you're applying it to some of the most complex, but also some of the most simple problems. Like these are human problems of, oh man, I didn't update my subscription, and that then affects us, the retailers and things like that. So
Yeah.
I think you put on a masterclass of how you're listening to customers and their challenges and packaging it into one single integration to kind of make it easy and seamless. Very well done, and thanks for sharing your journey with us.
No, thanks for having me, Paul. Been a great
Yeah,
discussion.
yeah. Where can folks learn more about NjiaPay on the interwebs?
I'm fairly active on LinkedIn, Jonatan Allback, and our website, NjiaPay.com. It's getting a proper revamp now.
Nice.
But so LinkedIn is probably the best place to stay up to date.
Cool. Cool. Well, we'll include those links in the episode description. And yeah, Jonathan, just want to thank you again for joining the show. And for our listeners, it's been another great episode of Tech Can Save Us podcast, brought to you by Literal Humans. And yeah, please give us a review, give us a 5-star rating so we can keep bringing amazing founders and CEOs like Jonathan Allback onto the pod. Thanks, everybody.